Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-magdi.com. For all trade, we'll use the 5% money management rules and apply stop loss in all trades. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTW traders. The title of this video is Elliott Apple Waves. Elliott Apple Waves. We are looking at Apple computer stocks on the yearly charts, okay? And this is about Elliott Wave, talking about, okay, Apple stocks. All right. On this yearly chart, we can see that the price was consolidating on the yearly chart from the year 1986, okay, up to 2003. It was just a consolidation for this company for many years, okay. But in 2004, okay, there was a change. There was a breakout. This is the first Elliott wave. You see this purple line here. From here up to this level here was the first Elliott wave for Apple stock. All right, so consolidation, breakout, okay, and we are expecting the second Elliott wave. So the first wave has started in 2004 and ended in 2007. When we are talking about Apple stock, we are talking about a market leader, the Nasdaq market leader. Okay, we have two leaders in Nasdaq 100, Apple stock and Google stock. Okay, these are the market leaders. Talking about the trading triangle, the leaders can change the dynamics of the market instantly. So in 2004, a new bullish trend has begun. The first Elliott wave has begun for Apple stock, a market leader, propelling the market together, okay, with Apple stock, okay, and the price was going up, okay. In 2007, the beginning of the bearish season, okay, the end of 2007 was the beginning of the bearish season for the market generally. A market leader has come to the end of the first wave, okay, and the price, okay, went down, okay. The second wave is the year 2008. You see from here down to this level here. If you like, we can make it okay, it's better now. Okay, it's too big now. So from here down to this level here, this is a 2008 here. This is the second wave for Apple stock on this yearly chart here down to this level. We are now in a third Elliott wave, okay, for Apple stock from here up to this level here. So from 2009 up to now, we are in the third Elliott wave for Apple stock. The key thing traders must check when we recognize the beginning of the third Elliott wave, we must check the fundamentals. Okay, in this case, we know that Apple's computers, okay, was creating excellent, okay, product, iPhone and all the computers, okay, and the third Elliott wave, okay, was supported by a strong fundamentals. Whenever you see a third wave, whenever you detect or you recognize the beginning of the third Elliott wave, go and check the fundamental. This is about the trading triangle. We are talking about the inside triangle. The leaders, the news, and the fundamental can change the dynamics of the market. Without a strong fundamentals, the third Elliott wave will not last. Okay, very important to have a strong fundamentals. Talking about the market itself cycle, we want to pay attention to the cycle of the market itself, whether it's bullish, and you will see this is a market leader which can change the dynamics of the market, which is the S&P 500 itself. So Apple stock can change the dynamics of the S&P 500 because it's a market leader. Okay, this is how the hedge funds and the professional traders are trading paying attention to the market first, the sector, and also the market cycles. All right. So this is we are now in the third area wave. According to the wave principles, okay, a wave of a higher degree can be divided into five. An impulsive wave of a higher degree can be divided into five subwaves on a lower degree. We are talking about a higher time frame and a lower time frame. So for instance, if you want to know more about the wave principle, you need to go to www.24elliottwaves.com. The difference is that on that website, we are talking about a practical Elliott wave trading, not a theory. The trading theory, we are talking about how one can make excellent trading decision using the wave principle. This is about the 24elliottwaves.com. All right. So if you are into the theory, you will be disappointed. All right. But we don't want you to be disappointed. So this is a third Elliott wave, which is an impulsive wave on this yearly chart of Apple stock, may be divided into five small waves on another lower time frame, probably on a monthly chart, weekly chart, even on a daily chart. All right. This is about market structure and also the fractal pattern of the market. A wave on a higher degree can be divided into five waves on another degree. You see here we have the second wave, which is a corrective wave, which is a contra-trend wave, okay? This section here, all right, can be divided into, three waves or five overlapping waves, all right? If you want to know more, go to www.24elliottwave.com, complex Elliott wave. All right, so we may see three waves on another lower time frame. Sometime, what I say to trader, talking about the guidelines for trading, when the wave count is not clear on one time frame, one may change time frame. Either you go to the lower time frame or you go to the higher time frame to do other verification. You can also do a comparison, talking about correlation comparison. So for instance, if I count five waves on the Euro USD, I know that the USD CHF, is negatively, more than 80% negatively correlated to the Euro USD. I may do my wave count also on the USD CHF. This is about comparisons to filter out false wave count. All right. So now that I count this on a yearly chart, I'll say, okay, I'm not going to stop here because I don't want to fool myself. Okay, I want to make sure that what I'm talking about is correct. So let's go now to another time frame. I'm going out to the quarterly chart and see whether things are working perfectly or not, because the wave principle is quite a powerful tool that can allow us to correct ourselves. If we are wrong, we will know straight away, or if another move reappears, we will know that I've been wrong here, so we can get back into line following the price shelf, the number one indicator. Okay, so the third area wave, which is the brown line that I draw straight up to this level on my yearly chart, we are now on a quarterly chart. That third area wave, which is still in place, is not yet completed. All right, we are still in it. Okay, has been divided into five waves. Pay attention to the blue line in this case. First wave up to this level here. Second wave from here down to this level here. Third wave from here up to this level here, and the fourth wave from here down to this level here. We are now in the fifth wave of the third wave. In another way, we are in the fifth subwave of the bigger third wave right here. That's where we are now, this one. All right, so the bigger third wave on the yearly chart has been divided into five subwaves on the quarterly chart. So it gives me a bit of confidence that my count is not that bad. Okay, all right, I can see now that my third area wave on the yearly chart has been divided into five waves. I am now in the fifth wave. whenever I see the fifth wave, the first thing that is coming to my mind is saying, caution, George, do not be, okay, too much bullish in the uptrend in the fifth wave. Do not be too much bearish in the fifth wave in the downtrend. All right, that's the first thing that's coming to my mind. Caution, fifth wave, caution. All right, the price may continue to go up more, but I'm more careful because whenever I count 1, 2, 3, 4, 5, the bell is ringing in my mind. Say to me, George, a market leader is in a fifth wave. All right, if you want to swing trade carefully. All right, I'm going to talk about that in another time. So we see now divided into 5 waves. This is the second wave right here. All right, so that's what we see on the quarterly chart. Let's go now to the monthly chart to see whether we can detect other things that we have missed on the bigger time frame. Let's see whether we can see something else that we didn't know before. All right, so now we are here. Let's move my indicator down. Okay, you can see that in this case there's a second wave which has been which is from here to this level here, from here down to this level here, has been divided into A, B, C. Now we can see it on a monthly chart. Okay, but we couldn't see it on the yearly chart, we couldn't see it on the quarterly chart, but now it's clear on the monthly chart. All right, so if you like, okay, I can move it down like this. Okay, so my second wave on the yearly chart, on a quarterly chart, is now divided, okay, into, okay, ABC. I can see it clearly now. On my monthly chart, that the second wave is a corrective wave which has been divided into 3 waves, A, B, C. A from here down to this level here, B from here to this level here, C from here down to this level here. And then we have that we are now in the third wave. So in fact we have a complex, we are now in the complex third wave, which is this section where I'm moving my cursor. And this was a complex second wave because the second wave has been divided into 3 waves. Talking about complex corrective waves, you may go to www.24elliottwave.com. Talking about practical Elliott wave trading. Though we couldn't see it, okay, let's go back again to the yearly chart. We are more concerned about giving to traders, okay, the knowledge so they may develop their own ability to trade. So you see this red candle, which is the yearly candle. That's what we are looking at on the monthly chart, which has been divided into ABC. This is just one candle here on the yearly chart. You can see also on this yearly chart, the third wave is just 4 candles here, all right, but has been divided into 5 waves as we have seen it on the quarterly chart. Let's move on now. We were on the monthly chart. Now I'm going to, okay, the weekly chart and see whether I can discover, okay, something new that I have not, okay, detected already. Ladies and gentlemen, all right, so we see now that on this chart, okay, we have counted, okay, 3 waves on the yearly chart, and on the, this is the first wave. You can see the price went up, pulled back, went up, down again, and then ran very fast up. Somebody may say, ladies and gentlemen, on this weekly chart, now it's not quite big as I want it, but that's all I can have. I'll put it for that. We can count again that our first wave is divided, okay, into 5 waves. We cannot deny it. Moment please, as I'm drawing my lines, I will come back to you soon, and I will explain few things to traders here, and then you will understand, okay, what I'm trying to do here. Okay. So now I'm going to color it. I'll color this time this one in blacks. I hope black will come out clean so you can also see it on the chart. All right, I can see it here, but sometimes when the video is played, traders complain and say, "Oh, George, it's not very clear." If that's the case, okay, please accept my apology. I'm not doing it on purpose. Okay, all right. It's working okay. Let's move on. All right, the last one, which is this one. Let's move on. All right, so the first way, which is from here up to this level here, on this weekly chart, we can see how that it has been divided into 5 waves. First wave from here, okay, to this level here. All right. Second wave from here down to this level here. Third wave from here up to this level here, and a fourth wave from here down to this level here, and a fifth wave from here up to this level here. There is something that Elliott wave traders will know straight away right here. We know, according to the theory of Elliott wave, that either the first wave, the third wave, and the fifth wave can be extended. Talking about the wave extension, the first wave, the third wave, and the fifth wave can be extended. So when we see that the first wave is not extended, the second normally the third wave should be extended because it's supposed to be the longest wave, but shouldn't be the shortest wave. That's the theory. All right, that's the theory. Do not forget the theory is different from the practical. The theory stated that the third wave shouldn't be the shortest wave, but normally it should be the longest wave. All right, so here you can see that it's not the longest wave, but it's not the shortest wave. It's longer than the first wave at least. All right, talking about 1, 3, 5. Okay, so when we see that the third wave, that all I can say to trader, when we see that the third wave is not extended, there is a high probability that the fifth wave will be extended. Now you may say to me, John, you said that it will definitely be extended, but that's not what I said. I said that there is a high probability that the fifth wave may be extended. Always, when we are about to see an extension, there must be a valid or a fundamental reason. Check the balance sheet, check the cash flow, compare the short-term debt to the current liability. Check the product, check the management. The price will not go up for a long time, even if you are in a you do your count and the company is just going round, and no smart money will participate in a wave. You want to have a fundamental reason to back the technical. That's my personal view, and I think that that's the conservative viable way. One of the shows that I watch on YouTube is the Dragon Den and also the Shark blah blah blah. Those are the things I watch, and for those who are following us, that's what I think is the best way forward. You may develop your own trading style, but conservative way of trading and doing things will keep you in this messy market. As I'm talking about messy market, ladies and gentlemen, in 2000, at the end of 2007, beginning of 2008, where my cursor is right here, a lot of hedge fund managers went out of business. Why? These are hedge fund managers that use fundamentals, but there is another group of hedge fund managers that combine the technical and the fundamentals. They know also about the trading triangles, and they know that a market leader can change the dynamics of the market. They have noticed those smart hedge fund managers who came out of the market, came out of the stock market completely in 2007. Some did it, and they just take all their money out of the stock market because they don't want to violate the trading triangle. They knew that, Apple has given them 5 waves. They didn't know that this is just going to be this 5 wave will be the first wave of a bigger cycle, but they have counted 5 waves. They have noticed that the third wave of all these 5 waves was not extended, and they have noticed that the last wave, which is this one, the 5th wave here, has been extended into a 5 waves here. 1, 2, 3, 4, 5. Okay, and they knew that okay, they have to be careful. What did I say? When we are in a fifth wave, whether in a downtrend or in an uptrend, the first thing that is coming to our mind is what? Caution. This is about practical area wave trading. All right. The price may not go down straight away or go up straight away, but you don't want to be playing around doing your own things. You want to be careful because you care for your money. All right. Okay. Now, just to get your attention, that's why I'm talking like this. Okay. All right. Though I'm talking like this, I'm very serious. All right. Okay. So if you are new to us, don't think that this is blah blah blah. All right. As some trader flag some of my videos say that it's a spam, but it's not. Okay. All right. So. All right. So we know now. So the smart hedge funds, okay, they closed their trade here because of what was happening to the market leader. Today, what's happening today? So this was in the past. Okay. So what's happening today? Today again, we are in a fifth wave, a fifth subwave of the third wave. All right. Caution again. All right. As I'm talking to you, they were excellent product by Apple. It's very, very difficult to sell Apple. Okay, you want to be on the bull side, but caution is required in this zone. We are in the year 2012. The year is not yet finished. There's a high chance that Apple stock may continue the bullish progression up to the year, up to the end of 2012. But at the end of 2012, we need to tread carefully. If Apple starts rolling it down, it will bring the S&P 500 down because it's a market leader. The trading triangle. All right. So do not forget that Apple is in the fifth wave, in the fifth subwave of the third wave. All right. So we need caution. All right. It's just that's recently I've closed half of my portfolio because of what is happening on here. All right. Because you don't know when the music will completely change or how fast the music will go, boom, down or not, or gradually or not. But caution. This is not a signal to sell Apple stock, a dynamic bullish stock, difficult to sell. All right. So this is just for educational purposes only. If you are swing trading, position trading, if you are hedge fund manager, you know that caution is required at this junction. Just simple. The S&P 500, which is the market itself, is now approaching the level of 1500, a powerful resistance level. Caution again. Apple is in the fifth wave, in the fifth subwave of the third wave. Caution is required. Now, if for instance, let's play a bit, ladies and gentlemen. Okay, I like to play. All right. So let's play a bit. So suppose in the end of 2012, ladies and gentlemen, suppose, do not forget, suppose, all right, investors, okay, decided to take profit in this zone, okay, we will expect to see the fourth wave, okay, of the bigger cycle, okay, the fourth wave of the bigger cycle. I'm talking about what we have noticed on the yearly chart, okay. Let's go back to the yearly chart and you will see, okay, we may see a kind of a pullback because we are now going vertical. For this vertical move to be sustained, Apple should continue to deliver better product and taking a bigger market share. Better product and a bigger market share. There is a competition aligning against Apple this time from Google Nexus phone. All right, myself, I use Samsung Note, but you can see that there's a competition aligning against Apple and also the market share, the product and the market share. This is what we want to talk about. By the way, as I said before, it's not a signal to sell Apple, but this is for educational purposes only. This is a dynamic bullish stock. All right. Recently, so as I'm saying to you, if for instance this, we may see the fourth wave, well, maybe in 2013 we will see bringing it down a bit, okay, and then giving us, okay, and the fifth way up, okay. That remains to be seen. It's just a projection. I'm not saying that it will definitely happen. The fundamental will influence all the blah blah blah, the technical, but we must keep eyes on the price. Recently, I posted a video on our YouTube channel, www.youtube.com/George Trio. The keyword is George Trio, on a monthly chart using our trading tool, diagonal move, vertical move, retracement to the opposite diagonal. When I was posting the video, I was telling traders that Apple stock has a high chance to give us a kind of a pullback. That was a few months ago. We were somewhere in this region here. We were expecting the price to pull back down to retest, okay, the opposite diagonal. As you can see on this monthly chart, the price went down for 2 months sharply down, but couldn't retest, okay, the opposite diagonal. But we see a kind of a pullback here, which forms, okay, the fourth wave of the third wave. Now we are in a fifth wave. Looking on the yearly chart, our drawing on the chart talking about diagonal move, vertical move, retracement to the opposite diagonal is still valid. As I explained to you, we must watch Apple market share and the quality of the new products, comparing them to the old products. This is a technical analysis. This is not an invitation to buy or to sell Apple stock, but it's just an educational video for Elliott wave traders. To know more about Elliott wave trading, one can go to www.24elliottwaves.com. Talking about the trading triangle, Apple is a market leader, Google is a market leader. Hedge fund managers, smart traders, serious traders must pay attention to the market leaders, knowing that the fundamentals, the news, and the market leaders can change, okay, the dynamics of the market itself, which is the S&P 500. Whatever we are trading, whether you are very bullish at this stage, caution is required, because a market leader is in the fifth subwave of the third wave. We may see the bullish momentum continuing up to the end of 2012, but at this stage, caution is required in all trading activity and investment activity if you are 100% bullish. Until the next time, enjoy yourself and be very happy. We are the TSTW traders.